Whether you've worked at your job for a day, a year, 10 years, a lot of you don't understand your pay stub and how much you actually get paid, how much you take home, how much you have to spend and save and pay all your expenses with. So in today's video, and I know this sounds maybe mundane to some of you, but 95% of you have no idea the expenses that come off your paycheck, how taxes work, CPP, EI, if you're self-employed, how that works. All that needs to come together to build that foundation to get started on saving for retirement, saving for the home, paying off debt, all of that kind of stuff starts with your paycheck. So let's kind of dig into it and understand what your paycheck looks like, how much you're getting paid, and how that works to your advantage. So in this first video of our financial stability and success series, we want to talk about income. Income drives everything that we do. And the more income that we can get, obviously the more we can do, but understanding all the nuances of it is very important. For a lot of you, if you work at a company that has a pension plan, has health and dental benefits, the reality is that you have a lot of expenses or line items on your pay stub that are eating away at your net benefit. Now, these are good things, especially if you have a defined benefit plan or a group RSP savings or stuff like that. You're building towards the future. That's great. But let's say you earn $60,000 a year and you plug, $60,000 a year into an online income tax calculator. It's going to say you're left with X amount. And the reality is you're going to have less than that because you have deductions on your pay stub that aren't reflected on an online income tax calculator. So let's look at a standard or a regular pay stub. And what you're going to have is you're going to have your gross pay, which is your gross monthly pay or bi-weekly, however you get paid. Now there's going to be deductions off there. Everyone's going to have tax deductions, so both provincial and federal taxes. Then you're going to have CPP and you're going to have EI. Now CPP, there's a maximum. You're going to pay 5.95% here in 2023. And there's a maximum. Once you've paid $3,754 into CPP, it's capped for the year. So if you're a higher income earner, you may kind of maximize your CPP contributions for the year a bit earlier in the year. And that's why some of you will experience that your take-home pay jumps up a little bit kind of later in the year. And that's because you paid max into CPP for the year. And so now you have to stop paying that, meaning that you have more in your pocket. And a lot of you, of course, now go spend that. So maybe you want to start allocating that to some sort of savings plan. So once you've maxed out your CPP, you start taking that and saving it for a different retirement income source, TFSA, RSP, whatever it is in between. So once you have your taxes and CPP and EI taken off, then a lot of you will have a health and dental plan at work. And that is something that a lot of you will be paying into. Now, your employer may cover most or all of those costs, but typically if your health and dental plan has some disability portion to it, you as the employee need to pay your disability portion so that if you ever do make a claim, you receive those payments on a tax-free basis. So you're going to see a line item if you have a health and dental plan, especially if it carries that disability, of a deduction there again. So this is coming off the net amount that you're taking home. It's a great benefit to have, but it's a cost to you and out of pocket. A couple other expenses would be union dues. If you're part of a union, some of those union dues and fees and that kind of stuff can get quite high. Again, there's a net benefit there for you, but the net amount that you're receiving taking home is much less than you maybe would calculate on those online calculators. So just, again, walk through, grab your latest pay stub and just walk through the process. What are your expenses on there? If you don't know, talk to your HR department, understand, what are these expenses for? What's the net benefit out of that? Understand your net take-home pay. And that's why everyone should know, here's what I make gross, before taxes, expenses, all that. Here's what I make net. And it's a net amount that we're really working with. Again, if part of those expense line items are a pension plan, a group RSP, some sort of retirement savings, that's great. That's going to help you down the road as you get closer to retirement. But it does take away some funds now. And I always say, people that say, oh, you have a defined benefit pension plan, you're so lucky. The reality is if you have a defined benefit pension plan, you're paying a fair amount into it. So those people, yes, it's a great benefit when they retire, stability, and it's a great pension plan, but there's a lot of money going into it and there's a bit of a sacrifice earlier on in life. I remember when I met my wife, who is a registered nurse by trade, I met her and I remember looking at her pay stub earlier on saying, wow, you actually pay a lot of money into your defined benefit plan. And it was about $500 or $600 every single month. Every pay stub was about $250 to $300. And so she was paying, this is in her early 20s, she was paying about $600 every single month into her pension plan for her retirement down the road. And I thought to myself, like, how many 20-year-olds are paying that amount of money to their future retirement? Now, she was forced to, but a lot of times you always look at the end result of saying, oh yeah, you were a nurse, you're lucky, you have a pension, you're kind of set for life. But there's some commitment up front. And that's why a lot of you, if you have a defined benefit pension plan, yes, you look forward, and it's a great benefit to have, but there might be a bit of a sacrifice now. So you got to work that into your budget. You don't have to maybe save quite as much for retirement as the next person because you're saving up that defined benefit plan, but it does affect your net take-home pay today. So when it comes to your net take-home pay, what we want to focus on here is what your actual net amount is. Now, again, we want to look at those line items to understand what are we saving for retirement, if we're building up a pension plan, making sure that kind of maps out into your retirement plan. But the reality is, whatever that net take-home pay is, that's what we have to work with within your budget. So again, this is why we need to start with this. It's kind of the foundation of building up, spending and equity and all that kind of stuff. Everything comes after that take-home pay. So figure out what that is, how you get to that point, and then let's take that and start working on a budget and spending and saving and kind of building that wealth that we want to all build. At the end of the day, it doesn't matter what age and how much you make. We want to live in a prudent way going forward and save as much as we can and retire as early as we can, and we all have different goals and objectives. So if we can take that net income and start working with that, and again, the following 4 videos are saving, spending, investing, and protection. So we'll kind of lead this net income into those videos as well. But again, many of you in your 40s and 50s and 60s, if you're watching this, you don't understand your pay stub. You get it, and money goes into your bank account and you just move forward. You need to understand like where your money is going, what kind of things you're spending that on, and what the net benefit is to you. And that's going to help. And where this comes out a lot of times is if you meet with your financial planner and say, yeah, I make $80,000 a year, and your financial planner puts that into software and it spits out kind of a net amount, and you have a defined benefit plan or you have union dues or these things, that net amount isn't truly reflective. And we've had this with some of our clients, say nurses or teachers, where they say, yeah, I make $80,000 a year, and we put their gross income in. We have to add another kind of expense column for union dues. Their pension adjustment gets built into it, but kind of union dues and other expenses that a lot of these professionals have, especially if you're kind of a government worker, that needs to be built in. So if you're working with a financial planner, make sure they understand all these other line items that may be on your pay stub. It's very important. So you don't want to just look at your gross income, you need to focus on your net income as well. Now, for those of you that are self-employed, and this is a big number, especially out here in BC where we're located, a lot of people are self-employed driving income in. And what happens is, you may be doing contract work or whatever it is, and the amount that you're getting is that gross amount. There's no withholding tax on there, there's no CPP, there's no EI if you're qualified to pay for it, or anything else. There's health and dental, group RSP savings, that kind of stuff. So if you're someone in a position that is self-employed, it feels like you're making a lot of money. And then come tax time, you get hit every single year with a big tax bill and CPP, and it just seems like it's all gone out the door. Everything you've saved is out the door. So you need to create a system to put taxes away, money for CPP, the Canadian Pension Plan, you got to pay towards that, and start saving for your own retirement. These are things that you would typically have if you were working as an employee. So even if you're kind of your own employer and self-employed, you need to have that mindset. Start putting money aside, like withholding taxes, CPP, EI, again, if you have to pay it, group RSP, health and dental. For a lot of you, if you're self-employed, you don't have health and dental benefits. You don't have disability, life insurance. You need to buy all this stuff. There's a cost to it. Again, if you're working, if you're younger, and we'll get into this in part 5 of this series, but it's asset protection, right? What is your biggest asset? It's your ability to earn income. So if you work for a big company, they're going to provide, hopefully, some disability insurance. But if you're self-employed, that's on you. Again, that's another cost that you need to build into your income and tax plan. And so these are things to consider. So if you're self-employed, it looks a little bit different. But understand, if this is your first year of self-employment, probably some adjustment. If you've been in this a few years, look back. What have you made? How much taxes, CPP? What are those costs involved with running your own business? Plan ahead so you know your net amount to work with, so you can create a proper budget, a plan, and start accumulating wealth. So tomorrow we'll talk more about savings in part 2 of this series. How to save, concepts around it, ways to save, and I have some tips for you to help you save more, save better, and just help your money work for you faster so that you can create wealth quicker. And this is through experience of 20 plus years working in this industry, helping Canadians and people across the country and across the world save better and save more. So stay tuned for that.